What's up, guys? Holy beep. So the market is obviously crashing. The VIX is at 45. So obviously right now the S&P 500 is on life support with the fear and greed at 4, which is pretty crazy. I don't remember seeing that ever in all my years of looking at the market on a daily basis. It's pretty crazy. This video is going to be a little bit more complicated, and the reason why is I'm here to make money. So if you're also here to make money, pay attention. This is going to be a super important video for you guys to learn, especially if this is the first time you're actually seeing a bear market. We are down from peak to trough on the S&P 500 is now down 17.6%. We closed the day for the S&P 500 down almost 6%. Yesterday we were down 4%. So we're down more than 10% basically in 2 days. If that's not a definition of the market crashing, I don't know what else is. So in this video, we're going to talk about obviously the targets. In my past video, we basically hit already the first target I had for the bear market, which was 512, which is the smart layer model. It's the first layer basically. And then the second layer, I told you guys in my last video, 450, 455, in that ballpark for the S&P 500. That's where I do believe we will most likely bottom somewhere in that range. I would be shocked if we go lower. Obviously, I'm going to be listening to my systematic systems that warned you guys since the beginning of this year. I was telling you guys we're going to have a 10% correction, a 5 to 10% correction. And yeah, we got that. And before that, I was telling you guys to raise cash, to have at least minimum 10 to 20% cash. You know, obviously I was wrong on my timing. I was not expecting the market afterwards in this ballpark in mid-March to basically trigger a risk-off environment in my system. It did. I told you guys I got stopped out of crypto. There's a reason why. And I told you guys that, you know, you want to be careful and you really wanted to just leave the market and leave it alone and wait and be patient. And there was going to be an amazing buying opportunity on the other side of all of this beep show. So obviously the market is basically going straight down. So in my last video, one thing I was wrong about is I told you guys I was not expecting the market to have a waterfall, and well, that's basically what's going on right now. We're having a waterfall to the downside. One of the big reasons I said that was obviously seasonality, and yeah, April and May is a window of strength. So I'm surprised that right now we're going down so fast. I was expecting this bear market to continue, but I was at least maybe expecting us to go sideways for a little while in this big sideways choppy range, if that makes sense, to then afterwards have another leg down after like summer. Obviously I was wrong. It's happening right now. And that's why in the last video I told you guys when we're in a risk-off environment, it becomes too hard to predict. Just be in cash, stay away from the market. And it doesn't matter if you have 20 years of experience or you're a newbie, everyone loses money. So this is why risk off, you F off. I already showed you guys in my last video how I figured that out. It's very simple. You just look at the momentum of the S&P 500 on the monthly time frame. All right, so this is the VIX, guys. Obviously, the VIX now is almost at a 4th standard deviation. We also hit a upper layer of the smart layer model right here. We could go obviously to 57 and 67, but obviously when the VIX is at 45, I mean, if you're capitulating and panicking right here, I don't know what the hell you were doing. I mean, hopefully, you know, you listened to my videos and you actually paid attention. I was pretty much spot on most of the things happening. Timing was a little bit off, and I'll admit that, super hard to time. I was wrong on other stuff, like, you know, specific horses I thought would run a little bit further compared to the broad market, but even those did not work. So hopefully you have a lot of cash. This is going to be an amazing buying opportunity. Right now, the stock market is basically broken. The fear and greed is at 4. I have never seen this before in my life. Like, seriously. I don't know. I don't remember COVID, honestly, but holy cow. This is like something you see once in your lifetime. Like maybe COVID and like right now with the tariff threats and all the crazy stuff coming out of the White House. But I just want to make something very clear that a lot of people don't seem to understand. The correction in the bear market that's happening right now, a lot of people are trying to play political games, but at the end of the day, it was going to happen no matter what. It doesn't matter if it was going to be the Democrats or the Republican winning the election, there was going to be a bear market. based on probabilities and statistic and the presidential cycle that I keep talking about. But the only thing that's different this time is the bear market usually tends to happen during the midterm years. So that's next year. But obviously with the volatility and the crazy stuff from the Trump administration, they're basically front running the presidential cycle. So I'm expecting the bear market basically to be this year, 2025, and then 2026 might be a little bit rocky, but we're still going to have a good year because the market is down so much right now. We're going to talk about that as well afterwards. That's less important right now. Just focus on the bear market. So I'll digress for now. Right now it's really about, are we at the bottom with the fear and greed index at 4, the VIX at 45? That's really kind of the question we should be asking ourselves. And right now we actually broke the key level that I talked about in my last video. I said that we were gonna go to 512 right here. That was my first target for the bear market, and then the second target is the layer right below right here. Nothing changed. So right now, yes, on the short term, at one point we're gonna have a rip your face rally to the upside. We have two big gaps right here to fill right here. I put some green rectangles right here. At one point we're gonna at least fill one of those gaps, but I do believe it will be sold off again. So as I said, when we were having this small rally here, obviously I was expecting a little bit more, but anyways, I told you guys not to fall for it. It was going to be a bear trap, and now same, nothing changed. So yes, we might have a big bounce, but be careful thinking we're going right back into a bull market. So hopefully that makes sense. So ironically, Bitcoin is going nowhere. So it's basically at the means again. Personally, I find it a little bit weird, but hey, if you're still all in Bitcoin right now, you're basically outperforming the S&P 500, which is pretty crazy because we're in a risk-off environment. Not too sure what's going on with Bitcoin, but something super interesting just to see. For me, I'm still waiting. None of my trend following system told me to get in for a big move yet, but it could happen. But I don't think so. I don't think it's likely based on probabilities at this point. So just want to give a brief shout out to Bitcoin because it is holding. I mean, the S&P 500 is down almost 6% today and Bitcoin is flat. So that's pretty crazy. So shout out to Bitcoin. A lot of crypto are also up, but that's one of the reasons why I'm kind of calling BS on the small bounce for crypto. We'll see during the weekend. Super important. Just look at Saturday and Sunday. It's going to basically tell us if this was a fluff or not. So afterwards, I'm also going to show you guys some super important surveys and internals that are going to help us time the bottom, basically. So anyone telling you can't time tops and bottom, I mean, look at all the videos I made on this channel. Pretty damn accurate, not perfect, but compared to all the people on TV and most people out there selling courses and making horrible YouTube video about the markets, I mean, pretty damn accurate if you ask me. Pretty happy. And I'm super pumped, honestly. I'm so happy because this is why I got stopped out of crypto, by the way, guys. It's all about risk reward. For me personally, looking at crypto and looking at my system, that was not going to be life-changing anymore. But I knew that there was going to be a life-changing event in the stock market. And then obviously, that would basically mean that crypto eventually will also follow to the downside. But at the moment, it's holding strong. And before I start talking about the surveys and also what I'm doing as a option strategy right now that I want to share with you guys, especially when the VIX is this high, there's actually a secret that I like to use. So stick around at the end of the video. I'll talk about that, how you can make money during a bear market. When the VIX is very elevated, there's a lot of opportunity. But before this, there's probably a question you're asking yourself, which is, what is the fair value of the S&P 500, right? We're down 17% in literally like 2 months on the S&P 500. That's pretty crazy, by the way. I mean, you don't see the broad stock market down 17% every day, so do pay attention. This is when you change your life. This is when you make a lot of money. This is my third bear market, guys. There's a reason why I was able to be this precise this time is because I paid attention during the past bear markets. I traded them. I made some, I lost some, but I learned, and that's what's important, especially if you're just beginning right now. This is the best time to learn. If you learn how to trade a bear market, man, holy shit, you're gonna be a rich person during the bull market. I can tell you that one. That's for sure. Especially if you're listening to my channel, of course. All right, so The question I said was, what is the fair value of the S&P 500? All right, so this is my secret when it comes to knowing the fair value of a stock. I use the monthly time frame again, just like I use it for trend following to figure out if we're in a risk on environment or a risk off environment. But I also use it for mean reversion. And what I mean by that is you can use standard deviation ranges. All right, so this is one of my models. It calculates for me all these levels. I can put as many standard deviation as I want, right? But what's important here is the means is the blue line. That's the fair value of the S&P 500 long term. And as you guys can see right now, we are below it for the first time in basically almost 2 years. So right now, if you want to buy the dip, this is when you start buying the dip, by the way. And so the point is right now, the fair value of the S&P 500 based on my model is about 542 and 95 cents, right? So give or take, say 540. Right now, as we speak, the S&P 500 is at 404. All right. So right now, the fair value of the S&P 500 is calculated right here in the table right there. It's 7.5% higher than where we are right now. So if you buy right now, you would be buying at a 7.45% discount based on the long-term fair value of the S&P 500, based on my model. Personally, I think we're gonna go lower. I do think that this bear market will most likely bottom at that second standard deviation, right? I could be wrong, not financial advice. So the point is, if you're buying right now, I mean, long-term, not a bad idea. Personally, I like being a little bit more precise, and the reason for that is you also need to be aware of what type of environment we're in. Are we in a risk on environment or a risk off environment? When you're in a risk on environment, you should always buy the dip, right? Because we're in an uptrend. It's pretty simple. And now I'm just going to show you guys the trend cloud model of mine. And you can see that it has now officially triggered a bear market signal. So this is the bear market signal I'm waiting for. I just waited to turn red. So it basically turned blue in the month of January at the end, meaning that the uptrend was over. So in January, this model was signaling to us that the momentum was fading away. All right, so this is how you can have leading signals of what type of market environment we're in. And then obviously I use other things that are a little bit more precise to really know when we're in a risk on and risk off environment. And right now, this is what I was waiting for to tell you guys that we entered a bear market, and it just triggered yesterday. I think it triggered at the end of the month of March, basically. So could we have a big push to the upside? Absolutely. This is what you will see when we enter this type of crap show right here. And I believe that, shoot, give me 1 second. All right, so sorry about that. I had a call and I don't remember what the hell I was talking about, but I do know that I was basically talking about us entering a risk-off environment. And yeah, we have big swings to the upside and the downside. So basically right now, don't be surprised to see big moves to the upside and to the downside and a lot of choppiness. That's what makes a risk-off environment. So hopefully that makes sense. And yeah, right now, in my humble opinion, based on my systems, we're now officially in a bear market. Hopefully you guys see some value. And by the way, some of my indicators I give for free access. So you just need to click the link down below. It's a Wix form. You just give me your TradingView username and your email. And then you just need to have a free account with TradingView. You don't need to pay for anything. It's completely free. I recommend the free version, by the way, especially if you're a newbie. You don't need to pay the monthly subscription. So take advantage of it. It's the time right now because this is going to be life-changing, guys. I cannot stress that enough. So going back to the probabilities and where I do believe we're going to bottom for this bear market, as I said, guys, I'm expecting us to basically go to that second standard deviation right here, which is about 472, and then combining that with the smart layer model, which is one of the indicator I give for free. You can see that this one is at 450. So in this ballpark right here is where I believe we are going to bottom. That's about 6.5%, 7% lower than where we are. So it's not that low. But I mean, if the S&P 500 goes down another 7%, I mean, stocks are going to get murdered. All right. So be careful. We'll see about crypto, not too sure honestly, but it's going to be life changing anyways in the stock market, so don't waste too much of your time with that. And then of course, like, I'll be back in Bitcoin, can't wait. But for now, I'm just chilling, and there's so much good opportunities right now. It's ridiculous in the stock market. So yeah, hopefully this helps. All right, so before I start talking about the internals, and you're gonna see some pretty crazy surveys where basically surveys plummeted, sentiment has plummeted, everyone is super pessimistic right now. So I'll show that right after this. But if you guys remember, I told you guys a big problem for this year was the 10-year Treasury yield for the United States of America, and the Trump administration need interest in the low 3%. And right now, a good news, one of the very few good news, is rates are going down. So the stock market is basically crashing, but rates are also going down. They are not crashing though. They're not going as low as the administration wants, but at least we're seeing some progress on what they want to see, and that's important to respect, because if that does not happen, you'll see, man, they're going to be relentless on hammering the stock market until we have a massive slowdown in the economy, and then the Fed, the central bank, Jerome Powell, is going to be forced to basically slash rates and listen to the markets. And right now, today, Jerome Powell, he came out, if I'm not mistaken, and he said he was not interested in lowering rates. He's still waiting for data. So right now, you still have that tug of war between Washington, the White House, and the central bank, the Fed, Jerome Powell. So you're getting this kind of like two roosters in a cage fight, So that's why we're getting all this volatility. And so definitely listen to what White House is saying and what the Fed is saying and what they're doing. That's going to be super important for the next coming months. The good news is at least it's going to be over after 2025. I think so. I do not believe that this will drag after 2025. And I think that, yeah, it's going to be way easier to trade and make a lot of money in the market. So just be patient, guys. Told you guys to be patient since literally the beginning of the correction to then, obviously right now, it morphed into a bear market, in my humble opinion. So just pay attention to what I'm saying. It's pretty damn accurate. I've been pretty damn accurate. Obviously, I've been off a little bit. Very hard to be 100% accurate on all of this. So hopefully you guys were able to understand me and it makes sense. And yeah, hopefully you were able to save yourself and have a lot of cash because this is going to be life-changing. So that's why I make this video on my free time. When I have time, today's Friday, perfect, right? And the market is crashing. So why not drinking my tea, chilling with you guys? Afterwards, I'll talk about some strategies and what I'm doing and specific names also that are going to be amazing buying opportunity. All right, so to continue with when is the good time to buy the dip, right? When to buy the effing dip. So I showed you what I used to know the fair value of the S&P 500. And in my humble opinion, I still think we have a little bit of downside, but obviously we're getting pretty close to the bottom. In my humble opinion, we're closer than we were obviously literally just a couple of weeks ago. So the speed of this move is very, it's pretty crazy. Honestly, it's almost as fast as the COVID crash. So that's pretty crazy. But looking at, again, the Sharpe ratio, right, to know when to buy the effing dip, we're still super high, guys. We're very high. Obviously, it's not the only thing I'm going to be using to start layering back in the market, but, definitely at least when we're in these lower ranges here, the second portion right here, that's really a good time to buy the effing dip based on history, if history obviously repeats itself again. But obviously, you can't just use one thing. Couple of months ago, I showed you guys the equity edging index. So hopefully you guys remember, I told you guys this was going to be one of the key indicators that we were going to be using to time the bottom in the stock market. So hopefully you remember. It's okay if you don't. It's all right. That's what I do. And yeah, so right now, look at this, guys. Huge spike. So that's good. That's really, really good. Obviously, I'm expecting us to basically look very similar to 2022. Maybe not as long though, because we've gone down so fast that, it might bottom even faster than I expect. Maybe, Q2, Q3, it really could, guys. So that's why the market is forward looking. So don't forget that. That's why you gotta have system. And then when we're back in risk on, I'll let you guys know, and then we're gonna make so much money. But anyways, the point is right now, equity index is really looking good. Obviously, I do believe it's gonna minimum go higher. So it's gonna take a little bit of time. It's not gonna happen overnight. Then most likely we'll, be there for a couple of weeks before we have a big reversion. So just wanted to give a quick update on that. Then the other internal I like looking at is the cash allocation. So how much cash do people have? So you can see that, man, cash has been going up, but you know, I think that cash could go higher than that. So we're gonna have to keep an eye on this. I think that, especially, I think there was a report yesterday from Goldman Sachs saying that retail was buying the crap out of the S&P 500. They were buying the dip, man, like a lot apparently. And then obviously today we're crashing again. So we'll see what the retail is doing. I'll try to find those information. It was from Goldman Sachs, if I'm not mistaken. So I do still think there's more pain ahead. And yeah, cash should be a little bit higher before we actually have the real bottom where everyone panics. Don't think people are panicking that much yet, especially crypto bros. I mean, I'm seeing everyone on YouTube, guys, all the YouTubers, they're still bullish. They were telling all their members and their subscribers to keep buying the dip literally for the past weeks, when I was telling you guys the complete opposite based on my system, right? So I'm still seeing retail being super bullish. Maybe today is going to change that though, because we're down a lot. And obviously sentiment always follows price action, right? Another thing that I like looking at is the conference board for stocks. Super important. I know this is dry, by the way, but this is the speak that makes you money. You gotta pay attention, all right? It's called a top to bottom market analysis, all right? Pay attention. Stop being lazy. This is the time, man. This is Friday. Man, I'm in like 32 minutes of freaking recording this crap while drinking my goddamn raw honey tea, all right? Let's make some money. All right, so this is the conference board. And as you guys can see, everyone was super bullish on the future expectation of stocks, literally like a couple of weeks ago. And then look at this, it just crashed. Like everyone's like super pessimistic, right? So there's a lot of mixed data out there. One thing I do know is even if we miss the actual bottom, my trend following system are all going to tell us that we're entering a new bull market. So that's why I'm not worried right now, and I am paying way more attention to protecting capital right now and just being solvent. And then obviously I'm going to tell you guys what I'm doing to collect some money with options, especially when the VIX is at 45. Man, that's crazy, man. It's so easy to collect premia when the VIX is at 45. I mean, it's ridiculous. But anyways, so yeah, this one, did I talk about this one? No, this one is another one. It's the stock allocation. And you can see this one is still high. So this is why I'm being a little bit cautious right now. I don't think this is the bottom yet. I could be completely wrong. And honestly, I hope I'm kind of wrong, because at the moment we get back in the bull market, man, shit, we're going to make a lot of money. So I just listen to my system at the end of the day. But right now, obviously we could see more pain here, way more. So that's why you got to use multiple of these surveys, because sometimes they can be a little bit misleading. This is another one. It's the University of Michigan stocks. So it's a survey from the University of Michigan, and you see this one is way lower. I mean, people are like just dumping their stock. So it's very misleading right now. A lot of different type of data. So that's why I'm just relaxing right now. I am expecting short term a big bounce, but I do think that we could go lower. I think we have more room to the downside. Personally, could be wrong. Maybe it's a cognitive bias as well, right? Got to be careful with that, especially when we're in a bear market. We'll just enter. So that's one of the reasons why I don't think it's over yet, because I mean, we just triggered it like a couple of days ago. And usually when that happens, it tends to last like a couple of months. It's not something that just goes away. The only time it actually went away in 2 months was COVID, but COVID was an anomaly, right? So that doesn't really count. And right here, the advisor and investor model, right? So basically, I would say that most surveys, you can see that investors are capitulating and are very pessimistic. I would say that and I would be pretty, I think I would be very confident saying that. I would say that more than 68% of investors right now are extremely bearish. So I think it's the majority. Could be wrong, but that's kind of what I'm reading personally from looking at all these different survey that very good at telling you where people think the market is. And then the last one I think is going to be just the exposure index as well. We're now at 50, so this is basically all the advisors that manage the clients' money. They're now at a 50% exposure to the market. So obviously we had a big tumble here. Usually the market tends to bottom when these advisors panic and they capitulate and we enter like a 25% exposure. So this is why I'm still expecting more pain, but you know, it's going to be tough to trade. I mean, we're going to have crazy reversals out of nowhere. Everyone's going to get bullish again, and then we're just going to crap the bed again. So just survive. I've been saying this shit since the beginning of the year of 2025, before we even had this correction. I told you guys, just survive the year of 2025, and then there was going to be amazing opportunities. So hopefully you listen. So basically right now, okay, super simple, cash secured puts. All right, so I'm going to talk about the strategy. Last 5 minutes, then I'm out of here. This is way too long as a video, but pay attention, listen to it. We're gonna make so much money. And right now, what I'm doing to make more money, to buy even more of the bottom, is I'm selling cash secured puts. And the reason why usually I do not do this during a bear market, but I will only do that when the VIX is at 45 and implied vol is juice to the titties. All right. So basically, I am able right now, because volatility is so high and it's priced so high because we have so much fear and uncertainty, I'm able to sell contracts at 25 strike price. Right here, guys. So at this level right here, that's the level of 25 for Robinhood. That's an example of a position I entered, and I'm collecting premia basically, because at $25, I want 100 shares, right? Like at 25, are you kidding me? Like, I don't care if we're in bear market or not. I can guarantee you, if I get to buy Robinhood at $25 per share, I buy 100 of those. That's only 2,500, by the way. That's nothing. That's chump change. And I can guarantee you that in 6 to 9 months from now, you're going to call me a super genius because I bought Robinhood at $25 per share, right? So that's what I'm doing. Because the implied vol is so high right now, we're able to sell contracts at deltas below 10 and receive the same amount we would receive selling, you know, at a 30-40 delta like just a couple of weeks ago when we're in an actual bull market. Because in a bull market, premia is lower because there's just less volatility. Right now, I mean, it would be impossible for me to sell at such a low strike price and still receive like a good amount in exchange if we were not in a bear market, right? So that's what I'm doing. So hopefully that makes sense. I collected about $120 US for basically one contract per contract, right? And basically, if I'm wrong, I'm going to be forced to buy at $25, but I want to, right? Like, it's like, why would you not want to buy 100 shares at $25 for Robinhood? Another one is Palantir, right? So I want to start a position at one point during this bear market at Palantir. So what I did is I sold a cash secured put at the 50 strike. So 50 strike is right here, guys, all right? And by the way, if you do this, make sure you're selling at a strike below the 200 moving average of the daily time frame right here. Just make sure you're below this, by the way. And you can see Palantir still has a massive room to the downside if this bear market continues. Stock tend to go below their 200 daily moving average when we're in a bear market, right? So for me personally, I'm telling myself, look, I don't really care, right? I can collect $200 US to sell at a 50 strike price. And obviously, I'm not going to hold those for too long. If we have a big bounce, I'm going to get out quick. So I'm not going to be greedy on those, all right? But worst case scenario, if I'm wrong, I don't care. Like, please give me 100 shares of Palantir at $50, right? So the delta is so low of these contracts that it makes sense. And the only time you can do this is when the VIX is this high and there's too much vol and the S&P 500 is basically crashing. You can take advantage of it. So hopefully that makes sense, and it's for educational purpose only. But I just wanted to show you guys how right now I'm slowly layering in, right? Because we did hit my first target for the S&P 500 for the bear market. So there's no reason for me systematically not to start layering in, but I don't want to buy at these prices because I'm still bearish, all right? Another example is Tesla. Finally, guys, I'm interested in buying Tesla again, but not at $230. I don't want to buy it at $230. So what I did is I sold a contract at the strike price of 160, right? And I collected $500 in this ball, like below this level. So I'd be like about here, yeah, at this level right there. That's 160, right? So I mean, the next layer model is 185. I think that's the bottom. I told you guys that a couple of months ago, like a month ago or something, when the stock kept going down, that we could go to 185. And for me, below 185, it's free money. Like, it's so cheap, it's not even funny. So you also need to understand the value of stocks. And Tesla at 160, I mean, please, exercise. Give me 100 shares at $160, and then I can collect $500, right? So that's another example. And the point is, in total today, I collected $1,000 in US dollar, which is not a lot. Okay, when we're in a bull market, I make way more than that a month. I make thousands US dollars a month just being an option seller and being more aggressive, of course. But right now is not the time to be aggressive, so I'm being super conservative. So worst case scenario, the shit hits the fan, there's a second tariff BS. I don't care. I'm gonna be forced to buy at 160, and in 6 to 9 months, you guys are gonna call me a super genius. You're gonna be like, oh my god, I know a guy, he bought Tesla at $160 a share. All right. And he was right. He called all of it. Okay. So that's what I'm doing right now. So hopefully that makes sense. All right. So my God, it's been like 42 minutes for this freaking video. Can't believe this shit. Thank God it's Friday. But yeah, that's what I'm doing. And then the point is, what am I going to do with that extra $1,000? Well, now I can buy an entire lot of SoFi stock. So right now, if I bought 100 shares of SoFi, the price is about $9.50, right? So it would basically be free. So I'm collecting premia at level ridiculous strike prices where the delta is below 10. I mean, even if I get exercise, we're most likely going to be very close to the bottom if we do go to those crazy levels. And then it's basically free money that I get to buy more of other stocks during the bear market to then do the covered call strategy against, like SoFi, right? I can easily buy 100 shares below $1,000, and it's basically a free position. And then I can collect $100 every month on just one lot, right? So it doesn't sound like a lot, but that's $1,000 plus $1,200 at the end of the years times 12 months. If I collect $100 per month, right? It's free money. I mean, why not? So that's what I'm doing. Obviously, I'm not playing with all my money, right? So I'm doing this slowly because now the VIX is at 45. We could wake up next Monday and the VIX is at 80. I have no idea what Trump administration is going to do. So be cautious. Probably not even a good idea. I'm just doing it because I know those are really good levels, so I'm okay with it, right? And it's barely 30% of my cash collateral. So just wanted to be transparent. I don't recommend you do that, but if you wanted to learn, there you go, guys. So hopefully you learn a thing or two in this video. You learn some cool strategies. You learn how to navigate a bear market, understand the fair value of the S&P 500, of specific stocks when you have good models. If you're interested, some of them are free. Eventually, when I have time and all my thing works well, I might help other people. So stay tuned for that. But for now, I'm super busy. I don't have time for that. And yeah, hopefully you guys learned a thing or two and just survive. Afterwards, I'll tell you guys when the market bottoms with my system. Oh my God, so much money to be made. Holy cow. It's going to be like ka-ching, ka-ching, moo. It's going to be make money city. It's going to be crazy on the other side of this. Oh my God. And I can't wait to get back in crypto. But right now, there's better opportunities in the stock market. That's the irony. All right, so hopefully you guys enjoyed this. Catch you in the next video. Stay blessed and God bless you.